Well, good morning and welcome to Wisdom to Wealth. Thank you for tuning in and joining us. I am your host, Whitney Hammond, owner of Sovereign Wealth Management, and co-host Theresa Pellizzari, financial security advisor with Sovereign Wealth Management. Good morning, Theresa.
Good morning, Whitney.
Thank you for being here again today. Really excited to be here. So research shows that people who work with a financial advisor develop 3.9 times more savings than those who do not. That's a big difference. So whether you are just getting started in your investment life, looking to manage your money yourself, or work closely with a financial advisor, Wisdom to Wealth discussions will provide a roadmap to the life you want and deserve. Our mission here is to help and teach you how to take control of your money versus your money taking control of you. So thank you for all the followers. We do have a lot of questions, and so keep rolling them in because we look at them and then we decide what to talk about. So today I'd like to talk about interest rates. I mean, interest rates have been an ongoing downward issue for a few years, and some of us might be tired of hearing about them, and some of us might be still trying to understand how this all works. So I think it's really important that we spend just a few minutes here and we talk about interest rates and what it means. And, a lot of times questions lately are like, why is the stock market, raging forward? Well, because there's nowhere else to go. There's nowhere else to invest your money. The rates are just so low that there isn't any return. It's almost to the point that the banks are going to pay us to take the money. So Theresa, could you talk to us a little bit about the interest rates and then also the process? Because I know that there's a process with mortgages and refinancing, and apparently it's gotten a little bit easier. So if you can help us, and tilt your laptop, you need to revote. That's much better. Thank you.
I was trying to look at the camera, not you. Your pretty face. Anyways, I'm going to focus on mortgage interest rates today. And as Whitney said, we've experienced a steady decline over the last 40 years. So I went back and looked at the historical numbers, and it's crazy that in the 80s, mortgage rates were 16 to 17%. And of course, that's when I bought my first house. So why not start at the highest? In the 90s, they were 7 to 10%, and which was back to where they were in the 70s. So they kind of zigzagged there. In 2000, we experienced 5 to 8% rates, and in the last decade, 3 to 5%. And in early 2020, pre-COVID, they were around 3%, high twos. And recently, I know my Canada Life clients are enjoying the lowest rates of 1.65. And
let me just jump in here. I've got to jump in here. 1.65. So there are people telling me that they are hammering their banks right now to give them a 1.9%. Some of them are 1.995. So here you don't have to hassle or argue. It's 1.65. Doesn't matter who you are. You don't have to negotiate to be a better client or consolidate, which, by the way, is not even legal. You cannot consolidate stuff with the bank to try and get a better rate. That's cross-selling. That's not right. So anyhow, 1.65 right off the hopper. That's for 5 years. So go ahead.
Right, and as Whitney said, there is no arguing. This is an easy process. With Canada Life, we require that you have invested at least $1 with us.
Oh.
So that's easy. I have any new clients can easily open a savings account with the money they're going to be saving from the lower interest rate. There is one more lower rate, and that is for first-time home buyers. So, or a client that doesn't have 20% down. My most recent mortgage was 1.56.
Wow.
And people wonder, well, why? They're higher risk. Well, they have no choice but to buy high risk insurance, which will cover the payment if they miss it.
If they
So
default.
that's a great bonus. So taking advantage of this opportunity isn't necessarily for everyone, but I think the biggest thing for me, for years, I always asked my bank manager, what's the difference if my mortgage payment on my balance, if I lower it by 1/4% or 0.5%? I could never get a straight answer. The calculation is simple. I'm happy to run anyone through it and teach you it so that you have it ingrained in your head. So we do all have extra time during these COVID lockdown. Why not learn? Why not take advantage, do a little bit of due diligence and really take control of your finances, as Whitney always says. I love that line, versus it controlling you.
Yeah.
So you'll have that answer.
Yeah, love
So
it.
I'll move on to the process. Our process has always been pretty buttoned up, but always in the pipeline has been the next level of technology, which was expedited with COVID. So as of January this year, all of our forums, everything is virtually. You've always been able to do your mortgage in the comfort of your own home. The difference now is we have DocuSign. So the advisor doesn't need to be there with you, but can be virtually answering any questions and helping you out along the way. So again, to take the time to learn. It costs nothing. It absolutely costs nothing and could save you thousands.
Yeah. Yeah. Like for instance, if your mortgage is coming up for renewal, or if you get a price on doing a discharge and redoing that mortgage, bringing your payments down. So what you could do is keep your payments at the same level, and that way you're paying more down on your principal. So let's just say your mortgage payment was $2,000 a month and you rewrote it and now it's only $1,600 a month. You could keep it up at 2,000 and you're paying an extra $5,000 off per year. And yes, it is important to pay down mortgages, because I think we're now living in a world where people are like, well, who cares, right?
Yeah.
Why do you have so much money tied up in your real estate? I can let you know. A lot of people. I mean, I've got 4 properties myself, and yeah, it's fabulous because I don't have mortgages, but and I don't need to leverage them out. But for families that are trying to get ahead and make things work, it's really important to look at this stuff and to look at it with somebody who is a certified licensed financial advisor, so they can run these numbers for you and say, okay, let's try to make your life better. And this is, Theresa, this is what you do. And I know you do a ton of work on this. And it's fabulous because with the Zoom, we just get on Zoom and crunch all the numbers through. So you did a ton of mortgages last year. And I mean, you're not even a mortgage broker, but we can all sell mortgages. It's just that you do so much deep planning that you take the time, you literally take the time to provide this service to people. So it's definitely worth a call to check it out. I just want to jump in here and talk just briefly about leveraging. So we do hear on the news all the time that Canadians are very, very leveraged, and prices of housing. Obviously, it's crazy. People have like $1 million mortgages, but the rates are so darn low that it kind of all works out. So in those mortgage refinances that you're doing, I'm sure that some people pull some money out and they put a big chunk into their RSPs. But another thing that has been, we've been doing this for decades, is that people like to leverage into the market. So for example, you invest your own money, which is the best way to keep investing it every month, no matter how much money you have or don't have, keep putting money in. Because you will make money. But the leveraging, so how that works is somebody will say, I want to save up, let's just use a simple number like $100,000. I want to save up $100,000 in the stock market. Is it better for me to keep putting dribs and drabs in to get to that 100,000? Or should I borrow the 100,000, boom, put it in there, and then the interest will be tax deductible from my pay from my work. So yeah, that actually works. And so that's been going on for decades. And mostly what people were doing were just writing off the interest, and then they would sell the account at some point when they were happy with the value, sell the account, take the profits, and pay down the loan. But another idea is, why not just pay the 100,000 off? Because I mean, we all do that in our houses, right? So you can do the same thing, borrow the money, put it in, and pay it off over 5 years, or pay it off over 10 years, whatever you choose to do. And then all of a sudden you've got $100,000 asset that, maybe it'll double in 7 years, maybe it'll double in 10 years. But that's another idea that can be done for people that want to take advantage of the low rates. So it's not for everybody, and there are risks, obviously. And one of them is a call. Like if your interest rates hike up quite a bit, but it looks like we're going to be in a low environment for a while, just until and we have to be. It's like COVID's going to be around for another year. It looks like we're going to be sorting through this mess. So government needs to keep the rates low. So so really good information today, Theresa. And I just want to encourage people. Theresa's offering a 30-minute complimentary call to help people to look at their finances. So she wants to look at their Q1 financial goals. And again, it's just a complimentary call, and she will help you with your numbers. And if the two of you like each other, it has to be a fit on both sides. It could be a win-win for you. So take advantage of this. She's locked in her house like I am, and so she's got time for calls. Thanks, Theresa.
Sounds good to me.
Yeah. So, okay, well, we'll give you the last say here.
Okay, well, one of my favorite sayings is saving money is making money. So that's what this is all about.
Yeah, fabulous. Okay, well, talk to Theresa, save your money, and build your wealth, build your nest egg. We'll talk to you next Wednesday morning at 10 o'clock, and have a great day.
Bye, everyone.
Bye-bye.